TradeTheMBI.com. This is John. This report is for the 12th of December. Well, we continue to bounce around this 4008 subline here that we've had for quite some time, and literally most attempts above have been repelled and below, and you can see we got a strong white crossover a couple days ago, and that has just continued to provide softness, but it hasn't been enough to really break things down. Now we're really looking at much softer MBI magenta and shakeout back into the negative. And once we were in the positive, it was looking fairly decent, but we're continued to break down, and we still never had the yellow cross back above magenta for any strength in that. DOC orange continuing to fall. A pivot up there really would solidify a move closer towards that 50% marker, which would be consistent with white leading at this particular stage. There are more and more evidence that the market really isn't believing a lot of the economic numbers that are coming through, and we're starting to see more evidence of that as oil continues to decline and things like that, is suggesting that there's been a significant softening in the overall position, and they all believe that that's going to lead to the Fed softening. But unfortunately, I think they could be mistaken on that. I don't think the Fed really is in that mind frame. I think they really want to remove the excess liquidity that exists out there, and the only way to do that is to continue to raise rates despite the repercussions that that's going to have. The elections are over, so there's really no pushback that they're going to suffer in the near term for doing so. They've got about 8 months to a year to really just do what they think needs to be done in order to rein that in. I mean, you can see the NASDAQ identical readings, a little bit stronger from a DOC standpoint, in the sense that orange is even closer, and you've got a pivot up of red DOC in that. So it could be that the NASDAQ staves off the pain, but even the short-term buyers popping up could be enough to just hold it. But it's gotten close to that 50% value, and that'll be critical when we reach that, because any break below there and white continuing to lead will definitely lead to a move back towards the zero. That will put significant pressure on the S&P as well. So treasuries, that surge back into it, people finally realize, there's some players, wait a minute, I think the Fed might actually be serious. Of course, we know this was all on positive extremes, so this was a distortion from the reality that existed, and we knew that there was something wrong with that construct, and so we would expect that to pull down rates to come back up a little bit as they recognize that there isn't going to be this fade of rates that they're anticipating. Now, that may happen later in 2023, but certainly is going to happen at the early part. The Fed's not going to reverse course that quickly, despite what it does. There's just way too much excess for them to have to wipe out. Down to 70 on oil. It's very healthy for economic growth standpoint, and would give the potential for the market to stave off major decline, or at least the economy from that standpoint, because at least that softening is less of a drain on the consumers. That gives a little bit of leeway. I've said anywhere between the 50s, 60s range is pretty comfortable, and we're very close to that. So that has significant implications for going forward. Gold, of course, is going to rise, because that's a recognition that there's a capitulation, that inflation is still progressing at a unsustainable level, and that they're not able to stop at the current valuations. And again, it's going to depend on what we start seeing for labor numbers and stuff coming out, wages and that going into the new year. If we've passed peak layoff, or if they've just begun, because that will affect hourly rates in that sense, because it shows severance packages, and that can kind of arbitrarily jump in, and you get a major decline all of a sudden. So if we see that in the next coming months, then we'll know that that's what that was from, and that does not bode well. And the euro, of course, that ever since they got the support coming through from the Fed directly, and with oil continuing to drop, like I said, that's a net plus to the euro, because it's less of a drain on their overall economic situation. And you're not seeing a whole lot of anything from Bitcoin. We got neither bullish, and bears aren't really doing anything. We're maintaining this pretty strong DOC here with above the 7.5 range, and still the shakeout, unable to really make any strides towards anywhere. I mean, it's still at negative 11. It's above 13, so there's the potential. It just hasn't materialized with actual buyers. We got to watch for that orange potential dip below red. If it can make it there, then maybe we can actually see something happening, and you get likewise actually even softer from a Ethereum standpoint. Though the shakeout is a little bit better off at only -8. This is the first time we've gone from the deep red here back into the weight zone. So it's building a little bit, and it looks like Ethereum may be the first one to come out of it. And you can see after the big decline, attempted push back up, just got us back up to the previous break of the zero down here at the beginning, and wasn't able to sustain that. Once we pivoted below, it's just been a slow and steady curve down. Not a whole lot of activity, though. I mean, look at the whole day. That's not a whole lot, but interestingly enough, plays against all of our algos that had been previously marked. We should see a dip down towards that 57 here. If we get the continued softness, we're sort of in this cyan red right here with the orange caught between, and that's just continuation. And we're certainly headed lower, so it's continuation lower. It hasn't accelerated yet. So there's potential that you can stave that off, but certainly not a whole lot of activity taking place at this particular stage, other than just softness. But the ranges, I think, are still fairly decent. I mean, moved down to 64 from being up near the 4020. That's still a significant number of points. 60 plus points is a pretty decent move, given that literally had nothing happening and then it just sort of broke loose. And this is going to be that imbalance. It's just a matter of the algos finding that trigger point where they can drive things in one direction. And we've talked about this when it's more holiday situation, that's easier for them to do, and they're certainly taking advantage of it at this particular stage. And I think they'll continue to, and that's just going to create some nice runs intraday for intraday trading. So, as always, though, you can look for me on the Skype chat. Trade well. We'll talk again later.